The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Wednesday, Friday at 11 o'clock till noon. Eastern time, that is. And, of course, I followed 2 fabulous hours of Steve Rhodes. Thank you, Steve, for a great lead into this show. Let me see. Today is this is the last trading day of the month. So we'll look at the monthly charts and decipher what's happening over there. Also, this is a technical Friday in the ChapmanWave, so we're going to discuss in a little bit more detail some of the aspects of these numerous chart patterns and techniques that I've developed over the years. It is June the 29th, and we've got, of course, the holiday coming up next week, so it'll be a shortened week. And from now on, people will talk about volume, but summertime volume is always way, way less than usual. So what I wanted to do at this particular point is just to go through each index and whatever it is, spend this first part of the program just going through some technical things, and then there's some charts that I wanted to look at, which I thought would be very interesting. For instance, I'll do this right this very second because I'm liable to forget. If I asked you, if I said, in this particular period of relative world peace, would you expect defense, or of course asking the question is setting up kind of a presumption. If I asked you and said, would you think a defense stock is at its lows or at its highs or close to its highs? But my answer would be, defensive stocks like the groceries and stocks like that should be holding up well, household items. Defense stocks with a C, I'd say pretty much neutral to low. Hey, try this. Raytheon, leg C up. Oh, wait a minute. Whoa, I might have missed one here. 55, round number 55. Nope, leg C up. With the technical still very strong. Monthly's breaking out. I have no choice but to call it hardly a G. But is it really an A? Whatever it is, it's a very strong pattern. RTN is a symbol at 56.12. And I got a good friend who's pretty senior in Raytheon, and we never talk the business of Raytheon. We just occasionally discuss, how he's doing, just in terms of work-wise. And he never seemed to be indicating that they were expecting huge contracts or anything like that. So I don't know. But isn't this incredible? Look, the high of the Raytheon was a doji high at 67.49. Folks, this is going to be interesting because there are so many monthly charts. This one hasn't got it. It just missed it. But there are so many monthly charts that have made round number highs. That's going to be interesting to decipher at the end of the day. Look at this. You go from the 67 area down to the 33 area in March of 2009, run up to 60, pull back to 43, and now you're back to 56, near a new recovery high. That's why you've got to, Larry always says, trade what you see. I think it's really important that you really... I spoke about this, was it yesterday or the other day when I was with Steve Rhodes, Monday, or whatever day it was this week, Tuesday I think it was. And we were looking at charts, and I said, I often talk about this chart, and I showed a chart. I didn't say what it was until I showed the chart, but it was a 1930 low, a 1932 low in the Dow, and then it went up for 5 years, fivefold in the worst depression, worst scenario that you could ever imagine. So it's really important. So under that guise, underneath that context, let me go through what I'm looking at here. We have no choice at this particular point but to call it a counter trend rally in the weekly chart. In the daily chart, it's very strong. The Dow held the 200 period exponential moving average yesterday and just sprang right off it. Actually, the diamonds, the DIA sprang from 120, where was it? It was just amazing how that worked. It went, now, for my subscribers, I have to apologize. We've had a technical problem here, a technical aspect I have no control over. So, the diamonds, which is a chart that I normally would have sent out yesterday and today, I had all this work prepared, couldn't get it out, managed to send out the Traders Corner this morning. Thank you, Mike, for the great help that you gave me. I'm hoping that the server is going to be up and working just great. So it happens so rarely, the technical aspect here at TFNN, they have a phenomenal service, and very rare is it that something goes down. When it's down, they just put every effort to getting it right. So the 124.25 double bottom that was made at about 3 o'clock yesterday in the diamonds, the low of 1130 on the 26th of June. This is the Dow Diamonds, the SPY Dow Jones Industrial Average ETF that you can trade as if you're trading the Dow. It's very close to the Dow. Went to 124.25, rallied up to peak B at 126.23, then pulled back and retested at 124.36 on the 28th, bounced, and then on the 28th, later in the day, came back to 124.25. I happen to love that pattern, but I was so busy with the frustration of trying to get things out that I couldn't do much about it. There wasn't much I was going to be able to do about it in any case for subscribers. But it looked to me, because of the rising stochastic and MACD, that the Dow would actually, if it held, and it took out that 9-period exponential moving average at the time, it was at about 125.23, that would be really good action. And it not only took it yesterday it didn't take it out, but instead it had a very good close. There was a 175-point move from the bottom to the top. That was very impressive. So today we've taken that out, and not only have we taken it out. No, I'm sorry, we did do that yesterday. I thought so. We went above the 9-period exponential moving average for the pattern I call the dreaded H, with a rising technical aspect of the stochastic and the MACD, and that is very positive. What happened is it closed almost at the highs, and today we've gapped up a huge gap, which one day will be filled in. We don't know exactly what day, but it's going to be filled in. And this is now leg C, but it's a gray C because it's underneath the 128.71 high of the 19th. Until it takes it out, I have to consider that it's a retracement failure mode. That's only explanatory. It doesn't tell you that, oh, it's failing. It says that it's going under the previous sharp decline, and until it makes a new high and it actually establishes a bunch of things at the new high, you have to consider it that at any point it could fail. So I've got this as leg C. The technicals are good. MACD is good. The histogram is only just now turned positive on the 120-minute chart. The stochastic's still only at 47. That's another reason why I have to call it a retracement failure mode, because there are so many signs. When I look at my 5 patterns here, and you look at the Dow 120-minute chart, I was talking about it yesterday when I did Tom's show. I said that having made a new low at 12,450, whereas 12,452 were the 2 previous lows, that means we have to start a brand new leg up. And if it crossed 12,646, that is the Dow, that has to be considered a new leg up, and that's new leg A. Now, technically, that would be really positive, because you say, A, you still got to go to B, C, and D. No, there are a whole bunch of things in the ChapmanWave that over the years, the experience that I've got tells me that until you break decisively above the 12,898, there's even the 120-minute chart, it too has to be considered a retracement failure mode. But whatever the leg is that goes above it, I will then reignite, because it never made a new low from the start of the previous low. If you're looking at my chart from 12,398 on the 11th of June, that says that this is all part of a higher low, and so far a lower high. And if it breaks above it, I will go from this F that was made, and I'll call this G, no matter what the letter is, G / whatever it is. And that way, if the technicals are still strong, I don't have to worry about a thing. I just have to say, okay, I know that there's an alternate count. I'm ready for anything, number one. Number two is, I spoke about this for weeks and weeks and weeks, but especially the other day, and especially to my subscribers, where I had my overview and market today section. I've never done this. I had this huge piker, just the biggest piker to say, VIX. It's all about the VIX. And I said that on the show yesterday, that above 20, you'll see selling pressure in the market. If the volatility index, the VIX, $VIX is the way I get it, or $VIX.X, if it goes under 20, so if it goes over 20, that's selling pressure. If it goes under 20, that's buying pressure. Today, and I had also mentioned that the VIX had bumped into this down channel. This is important. I said that there were two trend lines that make a little bit of a channel. I call it an inside track. And that if the volatility index couldn't get above 2123, I think I said, it would say if it's under that, it's been repelled. And look what's happened. The volatility index went to today's low of 17.50, and right now it's at 18.04. That remains buying pressure. Now, I know there are a lot of people that say, oh, this is just like all the other European things. Big spike up, and then we plummet down. I don't think so. I think that this has got some legs to it, and I'll explain why. There are a number of aspects that I'm looking at that tell me, first of all, the trend, which yesterday was kind of really didn't do very much at 1.57. That's really very low. I had a wonderful email from one of my subscribers. Oh, I just had another one. Scott, the opening call, the Traders Corner today was sent out via email, and there's been a problem with the yesterday and today, but today I had actually done it yesterday straight after the close. I got it written up and sent out. So far, the parameters that were set for Tuesday, you remember what I always say in my opening call, that if for whatever reason I make a mistake or there's something that I did wrong, or you don't receive it, or it's late, use the day before's parameters, and that would have been Wednesday's parameters. So far, all those parameters have been met. We are still decisively short three stocks that are still doing extremely well. Even today, with this huge market up, they aren't participating. I think they are going to, and we'll be looking to re-short. That's number one. Number two is, as far as the long positions are concerned, even what I wanted yesterday, we just missed buying one particular stock that would have been a fabulous buy. But hey, that's the way it goes. There's plenty of time. Don't worry about it. We'll all be updated by this weekend. We'll be back to normal, so you really haven't missed very much, and I apologize for that, and I will send you the link as soon as I'm done here. So let's get back to our story. I believe that there's no sell-off today, and not much anyway, maybe later in the day, but first of all, there's this buying pressure, and that's why I think even the shorts that are working are going to have some kind of a lift, because that's just, I talk about the tide, and right now the tide is rising. So we'll be back straight after this at 877-927-6648 to take your calls. I'm going to go through some of these technical aspects a little bit further as we move along. The Dow's up 222 at 12,824. The S&P's up 25 at 1354. And I'll be right back, and we're going to go through all these things, plus the requests in the den about the euro, dollar, etc. I'll be back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, and let's see. Okay, so let's go through the numbers. You've got the Dow at 12,823, up 221. All it needs to start leg D up is 12,898.95, 1 penny above the previous peak, and that starts leg D. And you remember what I was talking about? I said I do not yet have a signal in the MACD that it's crossed negative. The fast-moving average, if you're looking at Tiger TV, you'll see that the fast-moving average has, in fact, deflected back up. The stochastic is still only at 45%, not so great, and as far as I'm concerned, that is an issue. But I love to say you've got to understand how the technicals are either confirming or not confirming what you would like. I mean, not necessarily what you would like, but confirming or not confirming the price movement. In other words, the stochastic has crossed sharply positive in the fast-moving average, and the MACD's turned higher. But you've got tremendous price movement. Not only that, but the candle that we're looking at, and that candle is really important, because the candle we're looking at says from yesterday. Now let me do this because I'm going to go to the. This is a much easier one to see, my Dow daily chart that I wasn't able to send out to subscribers this morning. You see that wick? For a few days we had 12,452 as the lows. Then all of a sudden it went fractionally lower yesterday. That I'm so upset as it was. I didn't even trade that. I was so busy, and I normally that's what I grab. I say, oh, there's that fake out final late afternoon pullback. They said, oh no, we're going to close at the low, and then all of a sudden it just starts to improve. And if you look at the ESU, if you look at the ESU, the September contract, it went right to, the E-mini went right to the 200-period exponential moving average. It used it as a springboard. That to me is really important. So I don't believe that this is going to be, unless there's absolutely bad news on Monday, from the way it's acting and the way General Electric is acting. General Electric is just broken out. Let me explain something to you. This is a financial and an industrial. It has started a leg B up in the weekly chart, in the monthly chart. It's a falling axe pattern. Today, it's to close now at 19.05, the 9-period exponential moving average would be really difficult because it's at 20.59. I can say almost with authority that General Motors, the monthly chart is broken out into leg B. It's still a gray B because it's decisively under the 2165. Not even decisively anymore. It was. Now it's just under 1 point away from the previous high of 2165 back in February of this year, and 2370 has been for the year, has been my kind of upside target, the 2350 to 2370 area for General Electric. That says, hey, this is under the radar. No one's talking about General Electric, and here it is at a recovery high, 18.02. We had a fabulous position, and I haven't been able to get back into that position. Dumb. Oh, we did. We got back the other day and we took a 20-cent loss because I raised the stop because the market I thought was going to pull back a little deeper, and it didn't, and we're out, and now I have to struggle to get back in. Everything about it is good. So now let's go to the S&P, SPX.X. S&P, 1354.30, up 25.29. All it needs over the next week, if it can do it, is to climb above 1363.46 for leg D. But there's a left side, right side price time match, which is now extended, so I have to extend it as well. I have to go to the next peak. There it is. And I have to measure it up right there. Move it to the right. And that says by the week of the 3rd of, not the week, this is a daily chart. By the 3rd of July, that's either the day before, which is the 2nd, or the day after. No, the 3rd we're on. 2 and 3 we're on. It's the 4th we're off. Yeah, so by sometime midweek next week, there should be an attempt, at least an attempt to get to the 1363 level. And the 1365s is very, very strong resistance. How it breaks that, if it does that, how it holds if there's a sudden decline. The decline says that doji there, that candle open, 1342 would be very strong support at this particular point. Now, I'm going to just jump for a second because it's so important, because it's been moving together. The euro, the EUR-USD, the euro-dollar currency pair. Now, I spoke about this the other day. I said it was making a higher level, high bar, as the MACD was turning up and deflecting higher, and the stochastic was not good at all. But what was very important, and what is very important right now, is that it's charged above the 9-period moving average. We made the peak C1, C2, and what I said in the ChapmanWave, it's very often you actually do get that leg D. I'll be back and we'll go on straight after this. 877-927-6648. Hey, I'd still like to take your calls.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter, you get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and just quickly to finish up the euro, and then we're going to go to our first caller. The euro appears to be based on the C1, C2 ChapmanWave peaks that were made back on the 18th of June and slightly lower on the 20th of June, that if the euro closes anywhere around here at 1.266763, somewhere around here, and if there's no sell-off on Monday of consequence, by Tuesday there's a really good chance that it could climb higher, and that the high of 1.27468 made on the 18th of June will be taken out. And that'll improve the weekly chart. It's a shortened week. So it's going to be really interesting what happens, because if that occurs next week, that starts leg B up in the weekly chart, but the technicals are still lagging terribly. So the monthly chart is the major tide, and that says any rally in the euro is really just a counter-trend rally with major resistance to 1.311. So I just wanted to get that out, and just to say exactly what I'm looking at. And then the 120-minute chart is in leg A, B. This is made peak C, and there should still be another peak to come, at least leg to come today. We've got George in New York. Hi, George. How are you? George, you there? I suspect he's on a delay. Hi, George.
How are you today?
I'm very well. How are you?
Very good. Very good. Basil, today I wanted to look at Beezer, BZH.
Yes.
This is normally not an equity I look at, but it's highly on speculation is my thought here. And my reason being is that they formed a new REIT to buy foreclosed houses, and because they have the infrastructure to fix them up and rent them out afterwards.
It's a number of them, or is it mostly Beazer Homes that's doing it?
It's Beazer.
It's just Beazer. Okay,
Beazer
yeah, I heard about that. And I couldn't remember which one it was. And I thought to myself, by the time they finally get the plan implemented, let's hope the housing market is still going strong, right?
Yes. But the thinking is this. Again, they have the infrastructure already in place, meaning they have the factory, they have the employees to reconstruct the inside of these houses.
Right.
So they could be foreclosed houses, short sales, and also, of course, borrowing costs are extremely reasonable.
For now, absolutely.
So with that, I see it as a win-win situation. Again, that's only a hypothesis.
Now, let me just do a couple of technical things about it, because we know that it's a 328. Let me just do this, because it was on my list for a few days. As a spec. I didn't actually put it on in my Trader's Corner, and one of the reasons is we were going to leg D in Toll and ITB, that's the iShares for the home construction, as well as Beazer, and I thought, I haven't gotten in right now. I'm going to have to wait for these stocks to test the left side high bar. Folks, we're looking at BZH, Beazer Homes, Home Construction, at $3.19, up 17 cents, which sounds kind of like nothing. It turns out to be 5.63% when you got a very low price stock like this. Now, I agree with you, because what I was trying to do, I actually had for my subscribers, we just missed by a couple of cents getting a stock. It was also this was in like the $1.31 or $1.30 area, which also had the same kind of chart pattern. And I'm saying to myself, I love this, because for my subscribers, we've got stocks that are $400-500 that have been shorted. I like to also slap in a stock that could be treated as an option that is non-callable, because it's just there. It could be sitting for quite a while.
That's what I was thinking as well. Exactly.
And I tell you what, I'm going to. Do you have a position now? A little bit?
Not at all.
Okay.
So, truthfully, I was watching it from a technical point of view, because usually I like consistency, and of course we've been erratic here with the earnings on the home builders.
Right.
So I had, of course, switch gears and look technically at it, but I'm liking what I'm seeing on the chart.
I'm loving what I'm seeing on the chart. Now, Beazer Homes had a high of 82.14. Somewhere I've got the charts, but I've got the charts with Toll, I can't remember his name, one of the Toll brothers being interviewed, the guy from Hovnanian being interviewed, and this was about a week or 10 days. It was no more than 10 days, maximum of 2 weeks. It could even have been 3 days before the exact top in 2005, and each one of them said, we have got orders on our books for the next 2-3 years. Things look fantastic. I have the quote from Toll Brothers guy and Hovnanian. That was the top, and these things went. It's a problem when a stock, when the CEO says we have orders for the next 3 years, because we know home construction and home builders, these things get cancelled in minutes, right?
Absolutely.
When people get upset.
Yeah. Contracts are made to be broken.
Correct. And it made a high of 82.14 back on January of 2006. This was a little bit later than the others. Most of them were 2005. And it went from 82.14 down to a low. If I asked anyone what the low was, I'm sure nobody could guess it. But if I said the low was $24, they'd say, wow. If I said it was $14, they'd say, no. If I said it was $4, they'd say, what? If I said it was 24 cents, it was 24 cents. So we've got to understand that this market from 24 cents to the most recent high is a huge gain. So something is going on in that sector that at this point still looks very favorable. So here we go. I'm going to make a suggestion because I know that you're a position player and you like something. If you like something, you're not afraid to say, okay, these are the levels I will look at it. So I'm going to suggest that even though it's leg D and there could be some kind of a pullback between now and 318, so between now and $3.30, and it could even come down to $2.95 or even $2.83, I'm going to suggest just start a small position. And that small position is your plan. And the other plan is to have another small position. You don't have to go all the way down yet to the 283 area, but I would say another small position round about 295 to 289. And then another position, and this one is smaller than the others, but it's just an outlier, and it says that if there's just one sudden, one-day sharp pullback and it can hit 265, between 270 and 265, I'm going to put that in. And you're hoping,
and that's what I had earmarked, 271.
Okay, and what you're hoping is that you never get the low position, because when it gets to the low position, you now say, oh, my God, I've got 3 positions. That was my plan, but now it has to go according to plan. So that's the reason why I'm saying the 3 positions, and the last one is a much smaller position because that's the outlier. It's like that May of 2000 and whatever it was when the market dropped 1,000 points, one of those days. But it's an aberration. You don't want to be successively going down there. It's got to just be a sudden pullback. So that's my thinking. Now, this is the major thinking that I'm going through here. If Beazer Homes is able to close above $3.28, the high of the 4th of May, all of a sudden, the high of 398 back in February of this year becomes the target. And that says that the weekly can go to leg D. There's a lot of work in the weekly chart to be done in the technicals, but the daily is very strong. The monthly has improved tremendously, but it's really hard to talk about the technicals on a monthly chart when you go back to a stock that was once 82.14 because they get very distorted. So I'm going on fundamentals, which I've read about. I understand a little bit. I forgot that this is the one that had this going into the rental area. I like the concept. My gut feeling says that concept isn't going to be completed. Home builders always get the wrong side of the wrong thing at the wrong time. Not always, most of the time.
What I'm thinking is, again, because I come from manufacturing, so originally, and my thought is this. They have the infrastructure in place. So what happens is, as a home builder, they have to occupy the key employees. And in doing so, they could renovate kitchens, bathrooms, sheetrock, turn it around, and rent it out. But here you have a beautiful interest with the interest rates the way they are, and they could issue bonds at very low rates today if corporately they're structured well, with their assets. And I haven't gone over that as of yet, but with that in mind, then they could get inexpensive funding. So with that, you build your inventory, what I call. And they should have a positive cash flow today.
Yeah, that's very important. Not only that, as you say, they the ones that they're going to need.
By the way, in some areas, I'm not talking about key areas like Boston and New York.
Right. But, George, most importantly, they're in place to do it, so others will have to follow them. It's probably the others that are going to be late to the party, so they can already get it done very quickly. That part of it, when I read about it, and I forgot that it was Beazer, but when I read about it, I said, wow, these guys, if they already, they've got a heads up on most of the others. So, good. I like your thinking. That would be my plan.
Do you have time for one more?
Just give me the name. I've got someone waiting, so give me the name.
Neighbors, NBR.
Okay, NBR. I think I've got it notated. I had it notated.
Very interesting company, good growth.
Okay, very good. I'll try to do NBR before we wrap up.
All right.
Thank you so much for calling. Have a great weekend, George.
Basil,
thank you for calling.
Too. Be well.
Thank you.
Thanks for all your help.
Well, let's go to Dan in North Reading. Hi, Dan. How are you?
Good. How are you, Basil?
And I'm going to have to tell my engineer it's not R-E-D-D-I-N-G, it's R-E-A-D-I-N-G. It's like reading, right?
That's correct.
Right with the W-R-I.
I was wondering if you could take a look at crude. I've kind of been patiently waiting to get into it, and then I had this monster up candle today.
Are we looking, wait a minute, which contract are we looking at?
Well, I was just looking at the continuous.
Oh, okay. Because what's very important, is crude is up big today, right? Or it was.
Yeah, it's up almost 6%.
Okay, so this is the wrong contract. So I'm looking at July. So it had a left side, right side price time match. Okay, I'm going to go to the continuous. Do you have a position in crude at all?
I don't. I'll probably use the UCO if I go into it.
Okay, so then what I'm going to do is I'm just quick. Why are my notations not here? Oh, man, how many times am I supposed to do this? I don't know what's going on with my system. Maybe I pulled up the wrong one. All right, I'm going to go to the USO. If that's what you're going to trade, let's go to the USO. Because the USO trades very much like crude. Not exactly, because this one made a left side, right side. Oh, I love this chart. The USO, folks, is the United States Oil Fund. It's trading at $30.89. It's up $1.39. Now, if you look at this particular chart, if you look at the left side low of the week of the 7th of October at 29.10, it ran peak A, B, C, and then it failed at peak C minus. Now, when a stock makes, or whatever it is you're following, fails at a peak C minus, especially when it's decisively under the previous low, in this case the low of 45.60 back on in May of last year, that's a very negative sign in the ChapmanWave. It says there's not even enough strength to get to D. Watch out if you take out any of the previous left side lows decisively. Well, the left side low is that doji candle of the week of the 3rd of February at 36.67. On the week of the 11th of May, it plunges through, it goes to 36.03. And what does it do? It stops dead and exactly a price time match to that left side low of October of last year in the weekly chart. To this week, it's actually 1 week early that it's snuck underneath it. So this is what I'm looking at. There's a chance that crude oil is attempting here to form some kind of a base, but it's real easy for me in this particular pattern. The stochastic is flattening out. It's trying to rally at 8%. The MACD is still very negative. My suspicion is that there could be a bounce here. And this particular bounce, based on the daily chart, says I must look at the doji candle of the 19th of June at 31.81, and it's at 30.88. So for me, it's real clear. If the USO, which is basically trading on the price of crude oil, if it's able not to get there, but if it's able to close above 31.81, the high of the 19th, then the candle I'd be looking at is the candle of the 7th of June at 32.80. But this particular pattern has a lot of hazards to it. It could become a cup pattern, but at the same time, there's also a rectangle, and as you know, rectangles can last an awfully long time. So the way I'm looking at it is I suspect crude oil is going to bounce. I suspect that by Monday or Tuesday, we'll know if it's going to close above 31.81. If it does, it's going to try to get to that 32.60 to 32.80 level. How it handles that is going to be very important. That's the upside. Now, on the downside, what I'd be looking at, the stochastic is rallying, the MACD is rallying, so that's very good. My 120-minute chart says this is the first leg up, leg A. But if crude oil by Monday gives back and the USO at any point closes under 29.90, that's a real problem. Let me take just a moment extra during the break, and then I'll give you my summation of what I'm looking at, just in terms of what kind of trades I'd be looking at, okay?
Okay, great.
Good. We've got Dan North Reading holding on. Basil Chapman, Dow's up 219, S&P's up 25.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. We're back, and we're on with Dan in North Reading, and we're looking at the USO, which is the United States Oil Fund. It's an ETF, trades. I'm not sure if it's like gold. The GLD is 1/10 the price of spot gold, but it does trade very much like spot gold, except it doesn't trade during the off hours, during the evening, so that's a problem. So this is what I'm going to read. You don't have any position right now, right?
Nothing right now, no.
Okay. Because I would call this a counter-trend rally until I get more evidence, because the monthly looks terrible on crude oil. It really looks as if it could bounce, but at some point it might have to retest and make a lower low, and the MACD and stochastic are very poor. I'd have to call it a counter-trend rally. Therefore, you've lost the best entry for a full position. But the only way I can look at this is a little bit, this is very different to the way I spoke to George about his BZH trade. This one here, I suspect that you've lost the best opportunity for risk reward. I would wait for Monday. If Monday there's a sudden pullback and that pullback holds $30, it's at 30.87. If it holds 30.30 to 30.15 on any pullback, and then it starts to rally, that's when I would nibble at it. And I suspect in my hour at 11 o'clock on Monday, that's going to be a time I can do another assessment of it. Until then, I'm just going to say to you, normally I'd say nibble here. I don't even think it's worth nibbling here because this is a very big gap to the upside. I suspect some of the gap will be filled. Those are the levels I'd look at, and I'd have a little patience. And let's look at it again Monday if you want to call.
Okay. Sounds good. Thanks.
Thank you very much. And I'll tell you why, because if it is going to have a very strong 5 to 9 day session, there will be percentage points to it, but I don't want to take the risk reward right now with the weekend coming up. Thanks so much for calling.
Okay, thanks.
Thank you. So, folks, let's just go through this. I'm going to just run this real quickly because we're going to run out of time. We've got a long weekend coming. Maybe if some of you will be away a little bit next weekend. I had a question that I'm just going to quickly say the dollar has plunged. The euro has spiraled higher. The dollar's plunged. But where is it holding? Right at the 81.50s. This is very important because if the dollar and the MACD and stochastic are pulling back, if the dollar takes out the low of 81.19, that's going to be very positive for the euro. Then the euro is going to make that leg D. Whether it's just a one-time move or not, I don't know yet. But the way I'm looking at it, the monthly chart of the dollar is in leg D up. So those are the parameters to watch. The dollar needs to get back to 82.19 to show strength. Now let's go. I think there's going to be more energy to the upside in the general market. Not only that, if you are short stocks, for instance, we are still, in my opening call, still short. I'm expecting one of our stocks, which had a 20% gain, to bounce. And it is bouncing, but not great. It's just kind of like it's my duty to bounce because I'm down 20%. I suspect we're going to be able to either add to the short, I don't know, but I think we will. And the others that we have that are not really participating well at all are telling me that they will have a counter trend bounce, but this tells me that they have probably made significant tops, and then the restaurant area and the auto parts area, and that's the way you've got to look at this market. What is strong? What can I get? We missed an IPO that came out recently that just struggled. It's not the famous one, FB, whichever Facebook. There's another one, and I missed an entry on it. It would have been yesterday, but you know what? It's on my eye, and I think that we've got this bifurcated, this diverse market, and if you're able to do your homework and you can see strength, that strength is very important because you can buy the strength. If you see weakness, especially in a sector that's had a huge move and looks like it's been debilitated by the latest couple of days of down moves, those are the weak ones. So let's just go through this. The Qs, the NASDAQ Power Shares Trust Series. The Qs are at 63.69, lagging quite a lot. They're going to struggle to get to the 64.57 area, the high of the 20th of June. If they fail by Tuesday of next week or Thursday and break under 62.93, that's a big negative. I'm looking at the monthly chart of the Qs, and that's going to be very important. This was a big savior today for the Qs. So have a great weekend. My service is the opening call. Check it out on the front page of TFNN. Great having you here, and I'll be back on Monday. Have a wonderful weekend, everybody. And if I didn't get to an IBM, yes, counter trend move in IBM. Thanks for being here, and stay tuned for Nico DeHaan, and then you've got Dave White and Tom.